Well, ladies and gentlemen, welcome back to Boss Economics World, the only show that takes the dismal science of economics and turns it into a full-blown circus of financial absurdity. I'm your host, the one, the only, Professor Profit, here to break down the madness of markets, the lunacy of central banks, and the sheer clownery of policymakers, all while you sip your overpriced oat milk latte and wonder why your savings account is still earning 0.0001% interest. Buckle up, folks, because today, we're diving headfirst into the economic dumpster fire that is the Federal Reserve's latest drama at the Jackson Hole Economic Policy Symposium. Oh, and spoiler alert, it's 2025, and somehow, we're still arguing about interest rates like it's 2008. Let's go. Alright, folks, let's set the stage. It's August 23, 2025, and the world's most powerful central banker, Federal Reserve Chair Jerome Powell, steps up to the podium at the annual Jackson Hole Economic Policy Symposium. This is the Super Bowl of economic nerdery, where central bankers, policymakers, and Wall Street suits gather in the middle of nowhere, Wyoming, to sip artisanal coffee and pretend they know how to fix the economy. And what does Powell do? He drops the bombshell, or rather, the non-bombshell, that the Fed might cut interest rates in September. Might. Not will, not won't, but might. Cue the Wall Street cheerleaders doing backflips, markets surging, and the rest of us scratching our heads, wondering, wait, haven't we heard this song before? Now, if you're an ordinary Joe or Jane watching this, you're probably thinking, great, lower interest rates. Cheaper mortgages, cheaper car loans, right? And if you're a finance bro in the audience, you're already calculating how many more leveraged bets you can place on Tesla stock. But hold your horses, people, because this is Boss Economics World, and we're not here to sip the Fed's Kool-Aid. We're here to pour it out, stomp on the cup, and ask the real questions. What's the deeper economic mess behind Powell's vague promises? And why does the Fed keep finding itself in the middle of a political soap opera that makes the Real Housewives look tame? Let's start with the obvious. The Fed's obsession with interest rates is like a bad rom-com sequel that nobody asked for. For the past 2 decades, the Federal Reserve has been stuck in a cycle of raising rates, raising rates again, and then cutting them again, all while pretending this is some kind of sophisticated monetary policy. Newsflash, folks, it's not. It's a glorified game of whack-a-mole, where the moles are inflation, unemployment, and financial bubbles, and the hammer is interest rates. Here's the deal, Powell's hint at a possible rate cut in September 2025 comes after years of flip-flopping. Remember 2022, when the Fed jacked up rates faster than a barista steaming oat milk to fight inflation that hit a 40-year high of 9.1%? And then, in 2023, when they paused rate hikes, only to start cutting again in 2024 because, surprise, surprise, the economy started sputtering? Fast forward to today, and we're still playing the same game. According to the latest data from the Bureau of Labor Statistics, inflation in July 2025 was hovering at 3.2% above the Fed's sacred 2% target but nowhere near the apocalyptic levels of a few years ago. Meanwhile, unemployment ticked up to 4.5%, signaling a cooling labor market. So, what does the Fed do? They dangle the carrot of a rate cut, because apparently, that's the only tool in their toolbox. But here's the kicker, folks, interest rate cuts don't fix structural problems. They're like putting a band-aid on a broken leg. Sure, lower rates might juice the stock market, hello, the S&P 500 jumped 1.8% the day after Powell's speech, per Bloomberg data, but what about the real economy? What about the fact that household debt in the U.S. hit a record $17.8 trillion in Q2 2025, according to the Federal Reserve Bank of New York? Or that small businesses are still struggling to access credit, with 43% of them reporting difficulty securing loans, per the National Federation of Independent Business? Lower rates might help Wall Street, but for Main Street, it's just another day of treading water. Now, let's zoom out from the interest rate circus and talk about the bigger economic issue here. The Federal Reserve is under more political heat than a TikTok influencer caught in a scandal. Powell's speech didn't happen in a vacuum, folks. The Fed is currently dodging 3 major controversies that make it look less like an independent central bank and more like a punching bag for politicians and pundits. First, there's the White House drama. Ever since 2024, the Biden administration, or whoever's in charge by 2025, has been breathing down the Fed's neck, demanding lower rates to boost economic growth ahead of the midterm elections. Sound familiar? It should, because former President Trump did the same thing, famously threatening to fire Powell in 2019. And now, in 2025, we've got lawmakers on both sides of the aisle calling for the Fed to be more accountable, which is code for do what we want, or else. According to a recent Gallup poll, public trust in the Federal Reserve is at an all-time low, with only 34% of Americans expressing confidence in the institution. Gee, I wonder why. Second, there's the internal drama. Reports surfaced in early 2025 that Powell was considering firing a sitting Fed governor over disagreements on monetary policy. Firing a governor? That's like the Pope excommunicating a cardinal, it just doesn't happen. The last time something like this was even rumored was in the 1980s, and it caused a firestorm. This kind of infighting doesn't just undermine the Fed's credibility, it also spooks markets, which thrive on stability. And third, there's the public inquiry into the Fed's building renovations. Yes, you heard that right. While the rest of us are struggling to pay rent, the Fed is apparently spending millions of taxpayer dollars to renovate its headquarters in Washington, D.C. According to a 2025 report by the Government Accountability Office, the Fed has allocated $250 million for modernization projects, including, get this, a new gym and a rooftop garden. Look, I'm all for ergonomic chairs and a nice view, but maybe, just maybe, the Fed should focus on fixing the economy instead of its feng shui? Now, if you think this is just a US problem, think again. The Fed's decisions don't stay in Wyoming, they ripple across the globe faster than a viral cat video. Let's talk about emerging markets, shall we? When the Fed hints at cutting rates, it weakens the US dollar, which sounds great for American exporters but is a nightmare for countries that borrow in dollars. According to the International Monetary Fund, emerging market debt denominated in US dollars hit $13 trillion in 2025, up from $9 trillion in 2020. When the dollar weakens, those debts become cheaper to pay off, but here's the catch: if the Fed changes its mind and raises rates again, those countries get crushed. Just look at Turkey, which saw its currency, the lira, plummet 15% against the dollar in July 2025 after Powell's last speech hinted at tighter policy. And then there's Europe, where the European Central Bank is already slashing rates to prop up a stagnant economy. Eurozone GDP growth was a measly 0.6% in Q2 2025, per Eurostat, and inflation is stuck at 1.8%, below the ECB's target. If the Fed cuts rates, it puts even more pressure on the ECB to keep rates low, which risks fueling asset bubbles like the housing bubble in Germany, where home prices have soared 22% since 2023, according to Deutsche Bank. So, what's the takeaway from all this, folks? The Fed's latest drama at Jackson Hole isn't just about interest rates or political squabbles, it's a symptom of a deeper economic problem. Our global financial system is on life support, and central banks are running out of oxygen. For too long, we've relied on monetary policy to paper over structural issues like income inequality, corporate debt, and underinvestment in infrastructure. The Fed's balance sheet, which ballooned to $9 trillion in 2025, is a testament to this addiction to easy money. And yet, here we are, still arguing about a quarter-point rate cut like it's the key to world peace. Here's the harsh truth, folks: the real fixes aren't sexy. They involve fiscal policy, think tax reform, public investment, and labor market reforms that politicians are too scared to touch. They involve addressing the fact that the top 1% of Americans now own 32% of the nation's wealth, up from 23% in 1989, according to the Federal Reserve. And they involve rethinking the role of central banks, which have become the de facto firefighters of the global economy, even though their hoses are running dry. So, there you have it, folks, another day, another economic circus. Jerome Powell's speech at Jackson Hole was less a policy announcement and more a masterclass in saying nothing while sounding important. Wall Street loved it, Main Street ignored it, and the rest of the world braced for impact. But here at Boss Economics World, we see through the smoke and mirrors. The Fed's interest rate obsession is a distraction, its political drama is a disgrace, and its global ripple effects are a disaster waiting to happen. Until next time, keep your wallets tight, your skepticism sharp, and your oat milk lattes overpriced. This is Professor Profit, signing off. Peace out, and remember, in the world of economics, the only thing more inflated than the money supply is the ego of a central banker.